Hey everyone, welcome back to the channel. So in this video, we're going to be going over Cumulus Media's second quarter earnings results. Now, I think this quarter's earnings are very interesting because even though the company didn't report any eye-popping numbers, management did make a number of interesting comments and announcements and projections that I think really give investors a better picture on where the company is headed next year and in the long term. So if you are invested in this company or you are thinking about buying Cumulus stock, be sure to watch this video to get the most important information out of these recent earnings. So without further ado, let's dive right into the results. Now, before we get into these earnings, be sure to hit the like button. It really helps out my channel and helps push these videos to other viewers who may also be interested in finding undervalued stock. Also, if you're not subscribed to the channel yet, what are you doing? Go ahead and subscribe right now. All right, now let's get to the video. So I think there's really three important takeaways from this quarter's earnings. First is that total digital revenue grew by 55% year over year, with each of their digital channels posting new all-time highs. The second is the development with Cumulus in sports betting. So in this quarter, Cumulus struck a partnership with WinBet, which is the sports betting platform of Wynn Resorts, which is poised to become one of the largest sports betting companies in America. And this is poised to become one of Cumulus's largest clients. We'll touch more on this later in this video, but I think this is a very important announcement. And lastly, we have the continued debt paydown. So Cumulus is still cutting costs. Their expectation now for fixed cost reductions is $70 million in 2022 versus the baseline in 2019. Originally, they were expecting to cut $50 million from this cost structure, but they've somehow found an extra $20 million to cut off of fixed costs. So that's an extra $20 million per year being saved for shareholders. In addition, this quarter, they finally sold their Nashville Real estate. They got that deal done for $34 million, which is actually higher than what I expect. I think this is a very good price to be selling that property at. And again, all of this $34 million is going to go straight towards the debt paydown. And so here's information on the debt. So this quarter, they further strengthened their balance sheet with another $175 million in debt paydown. So now after this, they have $125 million on cash on the balance sheet and total net debt of $701 million. So it seems like every quarter this company is paying down more and more debt. And at this rate, it won't be long until the amount of debt on the company's balance sheet is pretty negligible. We're not there yet, but definitely making progress in that direction. Now we're going to get into the earnings call Transcript, because here management gives a number of interesting comments and actually gives projections for the full year of 2022, which I think is very important to investors and which we're about to get into. So now in the opening statement, the CEO gives a lot of information. So we're going to break this down point by point. First, she talks about the business model from a high-level standpoint. And really the way she sees the company is really two different businesses that work in synergy with each other. So she says that here with the core radio business is the one that generates consistent and stable free cash flow. Right, that is the cash cow part of the business. You are very confident in knowing exactly what you're going to be making from that part of the business. Even though it's not really growing, it brings in consistent cash flow that gives the company a bunch of cash, and they use this cash for the second part of this business, and that is to support expansion into digital adjacencies, deleveraging, and shareholder returns. So it's a good business model when you think about it this way. You have stable cash flows coming in from the traditional radio business, and the cash that this throws off is being reinvested into the digital segment of the business, paying down debt, and eventually returning capital to shareholders, whether that's through dividends or stock buybacks. Now, the next thing that she talks about is the new relationship with WynnBets. And so she says this is a good example of how they're implementing their strategy to fuel growth. And this content deal allows WinBet to embrace the entire Cumulus media ecosystem, whether that's through radio broadcasting, podcasts, the digital segment, and social activations to reach new users, while also letting Cumulus establish a strong position in the sports betting advertising market. Now, this deal is structured creatively, and I think a very interesting piece of information is that part of this deal gives Cumulus equity in WinBet, and that allows Cumulus to benefit from the upside of what WinBet does as a company. She also says WinBet will become one of our largest advertisers with significant room for continued revenue growth as more states legalize sports betting. And in the future, they think sports betting could become a top 10 advertising category for them. And this deal with WinBet is a big step towards that goal. So now for what she says here, I think this is very interesting. It was just last quarter where the company was talking about starting to enter into the sports betting area, even though they had no deals with sports betting companies yet. This is the first big deal, and like they're projecting, I think this deal is going to increase in size, and they're also going to potentially strike deals with other sports betting companies. Now, I think a huge upside to this deal is that Cumulus gets equity in WinBet. Now, this is interesting because WinBet is actually about to become a public company. So we can pull up this news report here. Wynn Resort's online gambling platform is going public through a SPAC. And so once this company goes public, Cumulus Media is going to have a minority stake in this company. Wynn Resorts is spinning off this part of the business to make it a standalone company, and Wynn Resorts is going to retain 58% ownership of the platform. And so it's not stated how much of the company Cumulus owns, but considering that Wynn only owns 58% of the company, I think it could be a nice chunk of the equity going to Cumulus Media. Now, I think this has the potential to make a big improvement to Cumulus's balance sheet, because if you look at what sports betting stocks have been doing, they have been on fire over really the past year. We can look at some of the most popular sports betting companies. The most popular one is probably DraftKings. And so if we look at DraftKings, they're currently trading at 24 times sales. We can also take a look at another popular sports betting company, Penn National Gaming. And if you take a look at what their stock has done, it has also seen a huge run up over the past year, going from under $20 now standing at over $70, even with somewhat of a drop in the past few months. So I think WinBet going public could bring a lot of attention to the company, and if Cumulus has a nice chunk of the equity, and if WinBet gets bid up to the valuations of some of their peers, this has the potential to be a big positive on Cumulus's balance sheet. Time will tell just how big, but this is a very positive sign for the company. Now, the next thing the CEO does is give us guidance for 2022 full year EBITDA. So she says, we'll refine this view as the year goes on, but we currently see a path to 2022 EBITDA in the range of 175 to 200 million. And so if we take a look at what Cumulus Media's EBITDA has been in the past, we can take a look at their income statement for the past 5 years. And if we take a look at their EBITDA in 2019, 209 million, 2018, 212 million, 2017, 185 million. So what the company is saying is next year, they expect almost all of the earnings power to come back to Cumulus before what obviously happened last year. And I think this is great news, because this was really my base case for investing in this company. Obviously, I invested last year when everything was taking a hit. Revenues were taking a hit. The company was losing money. And my thesis for this investment was, as long as Cumulus can get back to the earnings power they were maintaining before the pandemic, it'd make no sense for them to stay at the valuation they were at when I bought in. And so obviously, if just 2 years later in 2022, the company can get back to around the same earnings power they had in 2018 and 2019, this would just accelerate what my expectations of the company are. She also says that in our view, the market has not fully absorbed all of the discrete and definable vectors of value creation that make Cumulus a highly attractive investment. And so this might just be an attempt of management to bring some more attention to the stock. Honestly, I'm not really crazy about this. I think it's obvious that from a cash flow perspective, the company is very cheap. That's why I bought in. But if management really wanted to create value for shareholders, they wouldn't say anything about the valuation, and instead would just start buying back shares quietly, while the stock is underfollowed and still at a depressed valuation. So even though, yes, it is obvious that the company is cheap from a valuation standpoint, I would rather have management doing something like buybacks instead of just announcing that to the world. Now, here's another interesting piece of information from the CFO, and that is regarding the NFL and streaming of NFL games. So the NFL recently announced that in-game sports betting will be allowed, that in-game sports betting advertising will be allowed for the first time ever, which gives a great opportunity for Cumulus Media. So for anyone who doesn't know, Cumulus owns the rights for radio broadcasting of NFL games. And so obviously, if you want to advertise betting on football games, the best time to do that is probably during a football game. And so this will benefit Cumulus as well as TV advertisers. In terms of the question and answer section, a couple of interesting questions. The first question was talking about the trade-off between how will the company decide between paying down debt and in the future dividends or stock buybacks. And I think the CFO gives a pretty good answer, that right now they're focused on getting back to historical EBITDA to generate the free cash flow that would allow them to return ample capital to stockholders through dividends or buyback. They also say as they delever going into 2022, they'll be able to talk more about their leverage targets and how much cash they will have left over after that to return to shareholders versus doing other things with the cash, like investments or making acquisitions. And now we'll take a look at how the stock reacted to these earnings results. So the results came out on Friday. On Friday, not really much change in the stock, and then today, Monday, we saw a drop of 2.7% as the whole market had a down day. But I think this is very interesting. I think the company knocked it out of the park with earnings. They gave very strong guidance, and the market isn't really reacting. And because of that, I think this could be a potential spot to add more shares if you're already invested, or to start a stake in this company. Obviously, I'm not a financial advisor, so I'm not suggesting you to do anything, but even though I haven't bought more of the stock since it was around $4, I'll think about adding some more here. If you take a look from a valuation standpoint, the company's trading at under 14 times free cash flow from the last 12 months. Obviously, those levels of cash flow were severely depressed, and over the next 12 months, I think we could see double the free cash flow compared to the past 12 months. So from a valuation standpoint, the company is still incredibly cheap. There's very strong guidance now, and the main risk with this company, which is the debt, is shrinking quarter by quarter. So overall, I think a very strong quarter for the company. I'm excited to see what they do for the rest of this year, and especially going into 2022. And I think an interesting thing to watch will be the WynnBets going public, and seeing what kind of valuation that company is trading at, because that will have a direct impact on Cumulus Media's balance sheet. So that's all I really wanted to talk about in this video. If you found some value out of this, be sure to hit the like button and subscribe to the channel if you haven't already. So that's it for now, and I'll see you on the next video.